Hello and welcome to Pro Trader Strategies Market Commentary for Monday, January the 22nd. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get this on. It's a Monday and really not a whole lot of economic data. Actually, there's really no economic data here in the United States and or across the pond. We do start ramping up with some economic data later on in the week. Across the pond, we'll be getting out flash PMI, which is Purchasing Managers Index. That's a pretty important number across the pond here in the United States. Ours is the ISM. We are going to get some flash data here in the United States, but like I said, our flash data is not nearly as important as it is seen overseas. We have the ISM, which is a little bit earlier of a data point that's going to be the one that most people look at. And then we also get crude oil inventories later on in the week, and then we also get some GDP numbers here in the United States on Friday. So it does start to ramp up a little bit better. So maybe add some little volatility to this market, hopefully, or something there. But at least we'll get some more economic data to go off of for trades. All right, on to the overall markets. We've got crude oil slightly higher by about 21 cents right now. But the key thing to note is on Friday, we did get back down into this trend channel. It's bumping up against that today. So as I talked about, this trend channel, once it gets above, it's going to act as support on the upside and breaks down into the channel again. That's going to act as resistance. So once it gets back into that trend channel, another thing it's going to also kind of want to do is migrate back down to this line here that I'm extending out to the, I actually extended it out to the left. Sorry about that. But let's see here. Let me extend that out to the right, and we'll see that that shoots up. Those are not parallel. They are kind of a little bit off, but at the end of the day, we'll see this want to come down and start bouncing along this trend line as well, kind of stay in that channel. That's what we look for on these channels there. So crude oil kind of acting as we'd expect, still continuing into the upside, but back down in that trend channel. All right, gold futures just slightly off on the day. Not a whole lot to see here. It is above that 70 Fibonacci level. You know, I expected gold to really start to roll over with the good economic data, the market moving higher, but it is acting as a safe haven with these all-time highs. I'm guessing what is happening is a lot of people are taking some money off the table, and rather than just go into cash, they're throwing it into gold futures as they take some profits there. We've got Bitcoin off, not quite 1,000 points, so pretty quiet day for Bitcoin when you don't see $1,000 move, I guess, but is still up in the 10,000 handle, slightly above that by about 500 points right now. Not a whole lot to see here with Bitcoin, pretty quiet now. We've got bonds. Yeah, on Friday we started seeing this market rally back and was looking like a little bit of a bottom, but it finished at the lows of the days as the equities continue to push higher throughout the day. Slightly down on the day right now by just a couple of points, but this did not act as, like it was looking to bottom out. So I continue to see this one to kind of roll over, maybe come down here and test the 145 handle, as it looks like interest rates are going to continue higher. I'm starting to be a little bit more on the fence with these increases of 3 or 4 throughout 2018. Right now, the economic data isn't showing as robust good economic data as we were seeing before. That doesn't necessarily mean the market's not going to continue higher, though. We've gotten some good economic data. It's been better than we've seen in quite some time. But I think that we're not really seeing inflation, and there's a real tug of war going on between inflation expectations and the Fed trying to not lose their shirts on some of their investments. So they're going to really have to play that pretty close to the cuff. VIX coming off still in the 10 handle, still in double digits, but you can see a lot of volatility coming out of this market in the last couple of days, as we're seeing the Dow Jones Industrial Average up quite nicely today above Friday's high, and looking to test Thursday's high as well, as strong and robust as the market's kind of pushing today. We've got the NASDAQ above that trend line that we've set up for NASDAQ. It's gotten above that. It could be pushing well up and away from that at this point, and have to start doing some new levels here pretty soon. But a new all-time historical high for the NASDAQ, and as you can see, we are very close to that high right now, off just by about 3-4 points right now. E-mini S&Ps, just a point off of their highs right now. You can see these are happening intraday, so those are real numbers. Overall markets, just not a whole lot to hold these markets back with no economic data, not a whole lot going on. Looks like, the Congress is coming back, and we might have some more talks after the shutdown going into Friday. That's going to send the markets higher as well. So all of these things, as you can see, are good for the overall markets, and markets kind of celebrating that hope that the government shutdown is behind us. And then, as you can see with the E-mini S&Ps, like I mentioned, just very close to the highs, off by about a half tick. As a matter of fact, we just created all-time highs in this candle that we're talking about right now. All right, on to a few things that I'm looking at. Costco, I was really close to getting 50% of my max profit on this Costco. I have on the February, I'm short the 180 puts in there, and I originally sold them for right around $1. They're trading around a little over $1. Right now, they're trading around 51 cents. For the 81 puts, that's probably mid-market on there. I have a 40-cent bid in there. I was literally like 3 cents away from it, putting that bid in when we were at the highs there, and the market's kind of come off. I'm looking for this market to make a late day push as the rest of the broader markets are pushing higher and very near the highs. I think that Costco might catch up to that, but it's kind of getting away from me right now as we're talking about it. So looking to squeeze a little bit more than 50% of my max profit. Probably should be looking at around 50 cents or 47 cents or something, but it was making that move so quickly that I thought I'd easily be able to get those 40 cents. So at that point in time of the day, did I want the penny or the trade? I wanted the penny. Right now, I'm going to kind of hold off on it, but I'm going to be keeping a close eye on that today. And then if we look over to Apache, I have both this in my IRA and in my margin account, and I'm short. And why didn't you guys tell me this? I actually, when I started talking about this in the daily market commentary and looked up at my thing, saw I had on April, and I was like, why the heck am I out in April? I don't like to sell premium out there. There's not enough theta decay happening. I am getting a little bit of volatility coming out in the past few days. Today it's spiking just a little bit, but I am very close to 50% of my max profit on that as well in both my IRA and my margin account. So looking to get out of this sometime today. And I have on the April, and I'm short the 37.5 puts. But then to define that risk in my IRA, I'm long the 27.5 puts just to limit that margin. I'm going to probably leave on those 27.5 puts because they're only worth about 2 cents right now. No real reason to take those off. But in the 37.5 puts, very close to 50% of my max profit, like I said in that. So trying to buy them back for 35 cents that I originally sold that spread for just around 70 cents, just slightly shy of 70 cents. And in my IRA, I think it was like 71 cents or something like that. So close to 50% of my max profit on those, despite the fact that I got way out there in April. It's kind of coming together right now. So I'd like to get out of those because I don't want to be stuck in those for, especially this next duration here. If I held on to those to get full boat, you can see that I'm going into a earnings move there. All right, so for earnings, we've got Verizon coming out. So Verizon is a trade that I'll probably be jumping in on. They are starting to get a little bit of volatility coming out of those. But as you can see, they were at 100%. It's still pretty high. I'm going to be looking to get out of or get into a earnings trade with Verizon. There's also Procter & Gamble. Procter & Gamble, I'm not really sure if I'm going to play Procter & Gamble. It does have really high implied volatility. If I were, I'd probably play this to the upside, as well as JNJ is coming out with earnings. Volatility starting to come out a little bit on here, as you can see, but that was at 100% back then. I don't like to get into these earnings trades that far in advance of an earnings call, so I stayed away from it. What was the other one? I think Johnson & Johnson may be the last one that I'm really going to be looking at. And they all come out tomorrow before the open. So those are the ones I'm going to be looking at. Johnson & Johnson, Verizon, and Procter & Gamble. All right, that's about it. Friday's webinar is going to be on the conversion. Don't know what the conversion is. This is a really popular trade from the floor. It's a good one, especially if you own outright stock. I'm going to show you how to set this up. Rather than doing protective puts and things of that nature, I'll show you how to build this up to increase your probabilities of success. All right. So go to protraderstrategies.com, sign up for that. If you can't take that, take it easy.